What's up guys, hope everyone is doing well. In this video I'm going to be going over some updates for my overall big picture explication of Bitcoin with respect to my phase cycle system that I use and how I've understood and come to see Bitcoin. So first off, phase 1 and phase 2 combine to make a whole cycle, as you can see right here. Using this one right here, cycle 1 is our model, is our example. You can see, so I've gone over in the past videos, familiar my content, there's a W, we can look at this like a W right here. Then we are led into this lightning bolt formation, where you can think about it as an A, B, C, D pattern. From here we just get a gradual slanted downside until we start to flatten out right here. My momentum shifts towards the upside and we get towards our last peak for the cycle. I kind of just call this a valley type formation. But if we zoom in here on this origin cycle, let me point this out before I do that. So you can count this right here as one peak, this one is a 2, this one is 3, and then so right here is 4. So 4 peaks in total. So this right here is an all-time chart for Bitcoin, and this is zoomed in on here for our origin cycle. So you can see our W right here, see some consolidation right here into a lightning bolt pattern or an ABCD pattern. Then we get a slanted gradual just downside, and then we see our final thrust towards the upside at our 4th peak. Again, so we have 1 peak, 2, 3, and then 4 right here. And again, that is just compactified into this. And again, you can kind of see it. The W got cut off pretty much here on this chart, but there would be the peak right here, 2nd peak, 3rd peak, and then our 4th peak right here. So far within our current phase 1.1, within our second cycle, we're about halfway through it. We are, currently we are right here with respect to the first phase back here. We're still in the intermediate point before the final blow off top of this phase 1. And the whole point of this is that over time Bitcoin will be progressing with a factor of logarithmic decay. As Willy Woo said at one time, he put it pretty nicely, is that it's just kind of, Bitcoin is in a drunken stagger over time. Also goes into how if you look at the RSI down here, for each of these bare bottom lows, you can see the RSI is just continuing each time, setting lower and lower lows. That just goes into the whole drunken stagger and the fact that the strength, or just the relative strength of Bitcoin over time, is going to degrade, which means, and also just factors in again, and is all kind of just a part of the same umbrella, that your returns are going to diminish over time in terms of percentage gains per cycles, and also the cycles are going to be lengthening, which is why this W back here for this first phase, or technically the second phase 1, compared to this one right here, this W is a lot longer in time than this one right here is, but you can still pretty clearly see that it's doing the same archetypal formations at the end of the day. So for this one, once we got our drop down to 28,000, move up to 69,000, we were pretty much looking identical to this, so we still needed to see some sort of decay. So far we have seen that, and that is what is being pointed out here by this pink fractal pattern right here and this blue one right here. This blue one is what we've done from 69,000 down to 17.5 thousand, and this pink one is what we did back here in 2014 and 2015 from around $600 down to this bear market bottom. Overall, they are just ABCD patterns, bullish ABCD patterns to end off the bear market, which are connected by a bearish Gartley in between them to then lead into the final downside towards where we are currently at 17.5 thousand. We're also seeing a nice W right now, similar to our 2019 bottom, as I've pointed out, and also dissimilar to our 2015 bottom, although I don't think we'll get this sideways action for as long as we did back here for the 2015 bear market. I think we'll rather see the quick parabolic move, similar to after the March crash. Given the phase we're in, we'll have to see the second leg of the lightning bolt. We'll see our build-up phase and then our final blow-off top towards, as I've been saying, around $242,000 approximately. In general, just a range of around $150,000 to $300,000. And that was actually one of the updates I wanted to talk about for this, is I took another pattern. And it still holds the same as I've been saying. We'll reach these highs second half of next year, but it might bleed a little bit into January, February of next year. And by that I mean we'll pretty much, we likely could top out January of 2024, and that will pretty much signify when we start to lose that momentum towards the downside leading into the rest of in the second half of 2024. But for the most part, as you can see right here, most of the top for Bitcoin will occur in around November and December of next year. Again, we could come down and test as low as I think 10,000. I don't think it's really too reasonable to entertain anything lower than 10,000. Nobody so far I've seen is even entertaining anything lower than that. I did point out the other day in one of my other videos that there's a VPR support at around 7,000, but as I said, I don't think it will go below 10,000. If it doesn't even go to 12 or 10,000, then it could stop at around 14 to 16,000. And as I did say in my previous video, we could see a quick drop down to around 16,000 as some sort of a scare tactic. But at this point, I think it's all just 50-50, and that in terms of that, it's just going to go up or down at this point. But to go back to this chart, I want to point out here these moving averages. So if we zoom in here on this bear market bottom, you can see the yellow moving average cross below the blue. We had our final dump. Red moving average cross below the blue indicated that the bottom was set in. If we go and check these other two bear market bottoms right here, we'll see the same thing. Yellow below the blue, red below the blue. You see final dump, and then the bottom gets set in. Do the same thing for our current bottom. See the yellow cross below, final dump, red cross below, indicated the bottom at around 17.5 thousand. It's also nice to see there as well. To go ahead and point out the stock RSI here on this chart, you can see we need to reclaim this upper range to hold a bullish sentiment. Once we start to enter this lower range, we enter our bear market. Once we pop our heads back up to the upper range, as you can see in comparison to the price for this 2015 bull market, we carried a bullish sentiment all the way out into our high in 2018, reclaimed the bottom area, and then we did the same thing right here. We had a quick run up towards the top area, came down for this March crash right here, but did not bottom out completely or really hold this lower range for that while, and continued to gain a bullish momentum towards the upside at around 65,000 in March of 2021, and then from there we have entered for the third time on here a bear market in the lower half of the range. If we take a look at the MACD down here, we are pushing the upper range of the Bollinger Bands. We're also white right now. We flipped into white, so hopefully we'll flip into a blue, a bullish flip soon to carry on momentum, along with the stock RSI lifting off towards the upside, and as well as this bullish divergence we're seeing right here with respect to this RSI and our current price up here playing out along with that. Before I go to that chart, these vertical lines right here are, so I put this one in here on January 2011, just at the beginning, the first full year that it was out, and I did the whole 4-year cycle thing. So if we go out 4 years from that, it takes us to our January 15 bottom right here. Do it again, we have our January 19 bottom. If we do it right here, I don't think it's particularly in my current bias and how I think things are going to go. I don't think this is going to necessarily line up with the bottom, because I think the bottom's already in, and I think the charts are pretty indicative of that. But in general, these lines are just indicating very good opportunities and staples pretty much to buy over time to make a good profit off of that trade. But if we come and take a look here at this chart on the 2 weekly, the first thing I'm going to go over again are these moving averages. There's more on here. You can see once all 3 of these crossover right here at the same point, pretty much our bear market bottom is put in for 2015. If we take a look at 2018, 2019, we see the same moving averages. Do it again right here, also indicated the bottom, and then once more for our current period of time happened right here in association with the 17.5, the approximately $17.5 thousand bottom. Take a look here down at the stock RSI. You can see for each of these we got a bullish divergence. We saw the stock RSI lift off. Right here price was, it was pretty much sideways almost, but it had just ever so slightly negative slope, so we have a bullish divergence right there. You can see the same thing right here for our 2019 bottom compared to the stock RSI. Right here, same thing for the March crash, and also right here, same thing, assuming that we do lift off right here and we don't actually come back down and test this lower bar. But just outside of that, on this 200 EMA, this estimated moving average, we are forming this W right on top of it. So along with that being a good moving average to meet here on these higher time frames, these bullish divergences, the moving averages, combining that with this phase cycle system, and how it's clearly showing the same pattern, the same fundamental cycle, just being decayed with respect to the logarithmic progression. And another thing I wanted to point out about this right here is how it's just interesting how within its logarithmic decay of its progression, that it's kind of just taking pieces out of previous phases and just like sticking it onto it, kind of like a puzzle, because I mean, like I just pointed out, these are pretty much the exact same correction. We needed to decay this lightning bolt within this phase 1, so it kind of just took the play that it did back here in 2014 for this phase 2, which I just find pretty interesting. But I already went over this chart right here. The last thing that I really want to touch on before I get to some quick updates on the lower time frames, here on the 4 monthly chart, which I feel like this is about the best one you can get to. 6 monthly is pretty good to use. Once you get to 12 month, it's kind of just a straight up line almost, but I feel like the 4 month is really solid for anything higher than a month. First thing I want to point out is with Heikin-Ashi candles, whenever you see them start to thin up like this, the bodies, usually you're going to see some sort of shift in price. Right here, because we were in a bear market, we get the bull run. Right here, it initiated the bear market to start. Right here, you can see this one was thinned out too, which was just indicative to keep on the bear market. And that was when we got the major dump, the final dump into the low. You can see it was thinned out right here, which then led into the candles getting bigger into the bull run. We see another thin body candle right here, indicative of this bottom, or this bear market. And then for this March crash, we also had a thin candle, which was indicative of seeing the price shift towards the upside. And then same thing right here for this candle as well, to our current bear market. Right now it's not looking too hot because we are below this red moving average, which it hasn't closed below so far. We do still fortunately have 2 months left, and if assuming that this ends up playing out towards the upside, it's likely that this candle will end up thinning out like I just spoke about for these Heikin-Ashis, to the point of a release around 28,000, which I believe will then be indicative of the next candle after this pink vector candle that you see being blue, like these other blue candles, therefore being a indicator, signifier that the bull market is about to begin, which lines up with the end of this year, January of next year, which also is just, I go back and show you this right here. You can see right here we're getting January. If it follows through like this, once we get about right here, that's really when we're gonna start to make the final stride, until we get about right here during May of next year, and then we finally start to see more of a parabolic movement towards the upside. But if we take a look at the indicators in general for the RSI, it's kind of just looking similar. You can see back here, it's kind of almost like it almost kind of looks like a golden spiral, the little nautilus shell you see sometimes, and how they spiral it out. But in general, it kind of just looks like a curve to the downside. Each of these bottoms look pretty similar in how they formed. It's kind of like a 3. Right here you can see it was made in 3 separate lines for this 2019 one, and that's what it looks like right here for this 2022 one. But the general idea is that we are, as I've shown on the other indicators for the other lower time frame charts, we are in historical RSI ranges to buy in, and definitely by no means stupid to buy in right now. If we take a look at the stock RSI, it's giving us a pretty simple picture. Bull run, bottoms out right here, we get our bull run, hold this upper range, bottom out right here, we get our flip, and then we get our blue bar into the bull run. So far we got our flip into the downside, we got our pink bar, we are bottomed out similar to how we have back here for 2019, also as well for 2015. Given that I do think we are in this phase 1 and we'll get this second half of the lightning bolt, I think we'll see more of a quick bounce from here, or perhaps not, because anything's going to happen at the end of the day. But the main thing I wanted to touch on here for this chart is on this MACD. As you can see here, for this bear market of 2014 to 15, that was 2 bars or 242 days. We do it for the 2018-2019. We see 2 bars again at 245 days. We do it for our current bear market. We again see the same thing at 2 bars, 243 days. So that's very interesting to see as well. Again, that was the last thing I wanted to go over for my updates on my overall macro view. To go over quickly here on the lower time frames, I think it's this chart right here. Here on the 12-hour, it's pretty simple. I just kind of need to continue holding this upper range of the stock RSI and continue to see this MACD carry on momentum towards the upside, with the RSI following in suit with respect to those as well, and price continuing to move upwards, breaking 21,000, breaking 22,000, and most importantly breaking 25,000 so far here on the 12-hour, or this is the 1 hour, my bad. We are holding 19,000, we need to keep that, and as I said, breaking 25,000 is really important right now, as that lines up with breaking what we got rejected at back here in August, especially if we do break 25,000, then head towards the $28,000 to $32,000 range, and then hold that and continue to move higher. It will more likely signify the likelihood of this bullish path being taken. Outside of that, that was all that I wanted to touch on in this video. Hopefully you guys enjoyed, hopefully you learned something, and I hope you all have a blessed day.